Hi there, this is Chris from MoneyHub, and this video looks at life insurance policy comparisons. So what we've done is we've put together a guide which I've linked to in the description below, and it's going to walk us through basically everything we need to know about choosing a life insurance policy specific to a sample of insurers. So before I go any further, I just want to say the best approach for life insurance is really just to compare. Make sure that you're comfortable with whatever the quotes are, whatever the policy is. Please ask your broker, please ask the insurer, whoever you work with or whoever you buy it from, the questions that you need answered, and make sure you understand them. Because too often people don't understand, and then if they need to claim or if they need to change or anything like that, then there's a problem sometimes, and it can be quite stressful because of the amount of money involved. People buy life insurance, of course, for a long-term benefit for their family. So it really is critical to understand stuff up front that really matters when, if the worst happens. So I'm just going to go through our guide, and you can find this, as I said, linked down below in the video description. And what we've done is we've just done a summary of why you should buy life insurance, and then some must-have policy features, and then how to get the best possible deal, i.e. price for life insurance, and then basically our view of life insurance and how to go forward. But that's not any type of advice. It's just some journalistic tips. And then we've done a comparison between popular, but not the complete list of insurers, just popular life insurers within New Zealand, which I'll go through. And we've also done a table, which is actually quite helpful. And then I'll talk through some common mistakes, which we've put in our guide as well as sort of touch over some frequently asked questions. So without further ado, I'll just go straight back to the top and say, why do you need to buy life insurance? This is a very common question we're asked. We've published lots of guides around it. The answer is really, in short, to protect your family or loved ones, I should say, from your passing with regards to financial obligations. So if you have a mortgage, if you have like a lot of debt or things like that, and there's no way that those would be able to be paid should you die or when you die or prematurely die, then life insurance really kicks in there, and it's designed to make those payments for you because a lump sum is paid out, and then that's the purpose of that is to clear these debts. You name your beneficiaries, i.e. your children, your partner, wife, husband, whoever, and basically that's pretty much what you do. You pay the annual, fortnightly, or whatever terms you agree on policies, and that's how it rides. So the goal of life insurance, as we've said here, is to replace lost income and reduce the debt burden and then cover unexpected costs. So too often, unfortunately, then throughout New Zealand, people do die and they just leave debt. And it's very hard, even with two living people right now with high cost of living, high mortgage costs to, keep it together, let alone if someone unfortunately is not there anymore. So what we've said, and this is certainly not insurance advice, is that a good rule of thumb, if you're working out how much to actually insure yourself for, is going to be 10 times your annual pre-tax income. But, as costs go up and interest rates go up and, mortgage debt's larger than it used to be, then you really need to go through a life insurance calculator. And that's something which I've linked to down in the description as well. That works through, all the debts that you have and what you'd like to leave children and things like that, all the considerations to get you a more accurate figure, which you can then get quotes for. So what drives life insurance, the annual cost of it is going to be really your age as well as your health, plus the amount that you want to be covered for. But what makes a good life insurance policy? So this is really, really important. It has to be something which you understand for a start, but secondly, it has to be quite generous with the amount of coverage. So lots of things, of course, won't apply. If you are going to die, you only die usually of one thing, but you want to make sure that that is covered. Should that actually happen. So we've listed here some must-have life insurance policy features. So useful ones here, of course, are funeral costs, because those are just really annoying when someone dies, and they can be taken care of the life insurer without having to wait for a full payout or any kind of thing like that. It just settles funeral costs up to a certain level straight away. Terminal illness cover. So this is popular now. People, if they are diagnosed with something fatal or something terminal, then the option there is to just take it out because you're not going to survive it, and it's been certified of that. so that you can enjoy the money with your family and, make plans while you're still living, and then, go from there. Special events increases. So this is something where you'll be able to change your policy or make amendments to it with a change of circumstances. And that's usually getting married or getting divorced, having children, taking out a home loan, like the big financial decisions that you make along during your life. So this benefit with an insurance policy lets you change the sum. It lets you change the sum assured amount. So, i.e., if you wanted $500,000 of cover or 750, and if you wanted to increase it to say $1 million, then that's going to let you do it. Of course, you have to pay more, but it's not going to generate a bunch of new underwriting and a bunch of new form filling and medical assessments and things like that. Now, premium waivers. This is certainly something relevant quite recently, of course, with the high cost of living and like everyday New Zealanders generally struggling in some capacity. Premium waivers are a helpful benefit should you not be able to pay life insurance premiums. Then, a life insurer can, if they do have a premium waiver, keep you in arrears or keep you overdue for about 6 months and help you to kind of make the payments rather than just cut you off where you lose the benefits. And then some life insurance policies have extras, trauma cover as well as income protection, and this is when you'll be able to pay a little bit more, but it's kind of like it's much cheaper than taking standalone policies for trauma slash income protection. And so, should you have an issue where, like a health issue where you can't work or something like that, then that will kick in. But at the same time, your life insurance is still valid. And then financial advisory support. This is something that's really quite useful. Is that sometimes families don't really know what to do with the money. Of course, the obvious would be to pay off the debts, but some insurers will have advisors there to help kind of give some guidance should that be requested. Now, how to get the best deal. This is really, really important because a lot of people, arguably from our research, we believe overpay or don't really challenge the market enough. We don't think you should ever go to one insurer directly and just call it quits there and sign up. We think that you can pay too much and you won't get the best deal. You might not even get the best cover because there's a lot of things which need to be considered when you're shopping around for life insurance. So we think the best approach here is to just use a life comparison. Is to use a policy comparison tool. So something like Life Direct, but you can also talk to a whole bunch of brokers. You can talk to a local insurance agent or someone like that. Basically, get an understanding. Know what your needs are. Don't show up to them and ask them to explain life insurance. We've got guides for that to help you. There's also other YouTube videos, but you really do need to talk about your plans, with your family, and be very open about why you're buying life insurance. And then from there, then you'll be able to talk to someone. Now, that could be an advisor, that could be a company like Life Direct or any other comparison site, or it could be, with the insurance company directly. The more things, the more people that you talk to, the better information that you get overall, because we have more of an understanding as the journey goes on before you actually buy a policy. So really just make the decision to be upfront about it and be open with your family. It's not a great sort of topic to talk about, of course. No one really wants to, have long chats about life insurance because it implies sort of death, but it's really important to get the right coverage and make sure that coverage is enough. So what we've said here is, at a minimum, your life insurance policy should cover your debts, funeral expenses, full repayment of your mortgage, as well as your family's living costs. Because it's all very well to pay off a mortgage. It sounds great, and cover all credit card debts, anything like that. But if they're relying on you for regular income, for their ongoing expenses, then it's tricky if there's not a cash windfall there. I wouldn't call it even like a windfall, just a cash balance there to help them survive in your passing. So life insurance really plays such an integral component in your family's financial plan and future. And so we really don't want people rushing into it. We don't want people over-insuring because that's really expensive, and then they're going to be paying too much for cover that's too generous, and it wouldn't really, it would obviously cover everything, but it's also a risk. you might not be able to pay the premiums, in the short term. So we just want people to make the right decisions by, having those conversations, thinking about it, plus getting some different views from different people, from insurance brokers, from comparison sites, etc., and just making a fully informed decision. And and so life insurance, in a nutshell, our view is kind of just a summary of what I've said here: compare, compare, and compare, and tailor your coverage based on your individual needs. So don't be pushed into something that's not suitable for you. You've got to make sure the cover's right for you. It's going to cover, a wide range of illnesses, as many as possible. And if you just want a sense check or get some prices up front, which is a good starting point, we're really suggesting people use something like Life Direct, because they are transparent. You can also get, and we've done a full comparison on our comparison of life insurance, and you can see how our sort of methodology there. There's heaps of insurers to choose from, and that's just the samples that we've gotten online. But there's certainly others out there as well. So further on to there, just compare, see the prices, read the policies, and make sure you understand exactly what you're signing up for. Now, if you are choosing, it's coming down to now choosing between different insurers, which of course it will at some point as you progress, then there are lots of options. Of course, there's things like Chubb Life, which used to be Cigna. There's Fidelity. There's Partners Life, AIA. There used to be Sovereign. There's so many of them. What we say is that, generally, if they're well known, they're likely to be financially like safe, or sorry, secure. And the reason is because very few insurance companies go bust in New Zealand, but at the same time, you do want to understand what their credit rating is. So we've got a separate guide to that, which I've linked to down below. You can have a look, and it's all listed on the Reserve Bank's website. And what this means is that, the last thing you want to do is pay, years and years of life insurance and then find out that the insurer goes bust. And then, the day after, you get a terminal illness and suddenly you're not covered because the policy's no longer valid because, the insurer doesn't, because the insurer doesn't exist anymore. So that's a big problem. Of course, that doesn't happen in New Zealand, but it's just it can happen in New Zealand when insurers go bust. So just be very conscious that you want to make sure that you're dealing with a company that's trusted and it's got a financial strength, and just understanding that it's going to be there for when, should you need it if the worst happens. Premium structure, just moving on to something quite simple here. The common payments are annual terms. Some people do also make monthly payments, and you can decide, or sometimes fortnightly as well. But that really just comes down to what's right for you. And then they do, if you do have so further to that, you also have this thing between level cover and step cover. So we've got a summary of this, which is really level cover is that premiums don't change with the age, and basically you're locking in for life. And so that's pretty much, it's not going to be a short-term life insurance. You're going to get it for some time, and that will benefit people who just want to, not have to worry about increasing premiums. So as we've said here, there's usually 4 terms. So you get it for 10 years or up until the age of 65, 70, or 80. And it's just a fixed price every year. And of course, that's, statistically evaluated what you'll pay by a whole bunch of medical underwriters, a whole bunch of actuaries, and then it's fixed and you just keep paying it. And then should you need to claim, then, that will be fine, as long as you're obviously covered for it. And then you've got step cover, which increases as you get older. Sometimes if you have, some health issues that may also be disclosed, and then, that's going to change the policy as well. So there's 2 options there. That's best to talk to with an insurer. We're not providing any advice on that. It's just general information there, which I've linked to down below in the life insurance features. So basically, if I go back now, so just talking through the level and then the claims and approvals. So we've written some commentary which outlines, the way that life insurers assess their information. They'll ask for medical records. They'll, determine basically what you'll pay over the term of a year or over, the life term. So they'll, that's their job to do that. They're not asking anything which is, untoward or personal. It's more just make a full assessment so you can get the best possible price, but also they can price the risk on their end. Now, there's also further comments here around something called policy wordback. So wording passback, sorry. That means that if a policy gets improved, then what means, so like if you have an insurance policy and then later on, they've got that existing policy, they're selling it to other customers, but they make some enhancements on it and it's better, then they apply those back to you, but you don't pay any more. So the new customers may pay more because, of course, extra things cost extra money, but you get that kind of tailwind benefit. So some insurers offer that and some don't. And you can see here that and this was live at May 2023. So we're always updating this, but you can see that the likes of AIA and Partners Life, they do provide it. Chubb Life provides that, whereas some don't. That may change. So we've shortlisted here Fidelity and Westpac, but it really comes down to what the current situation is. So they can change that like any time, just like they can change their policies. So do have a look at our table there for more information. And so we've grouped everything there as to kind of give you an idea. All of them offer access to advisory, which is really helpful for making, with the exception of Fidelity, which is really helpful for making, informed decisions and talking with someone from the insurer directly. But at the same time, you can always buy life insurance through a broker who will also be able to provide the advisory assistance as part of their service. So if I just carry on, common mistakes, this is really important. So never get yourself into a situation where you're under or where you're over covered. And the reason is because you'll pay too much or you'll pay too little. But it's not a problem of paying too little. It's just that if you do make a claim on it and there's not enough cover, then it's not going to really help. So if you owe, say, $500,000 on a mortgage, but you're only insured for $300,000, then it's great. $300,000 can be put towards a mortgage, but it's still going to leave a residual $200,000 balance. That may be fine if someone else can afford the repayments, but often people just insure for their whole debt just to kind of like eliminate this sort of purgatory situation where there's some debt paid, there's still more debt to pay, and the loss of your life is obviously very traumatic for the rest of the family. And then there's still bills to pay, there's still things coming in, and it doesn't really solve the financial burden left behind. So that's pretty common sometimes because people don't really look at the change of circumstances. Maybe they have more children, maybe they get a bigger mortgage, but they don't change their life insurance cover. So if they upgrade their house or something, or change house. So just be aware that, not being covered for enough and at the same time paying too much means that, as I previously mentioned, you'll be over covered. So your premiums will be higher, which is annoying because then things get expensive. And also and kind of touched on previously, not reviewing or updating your policies. Just make sure every year that it's appropriate what you are paying. So reassess everything, look at your debts, because you can always change the cover without, a huge penalty at all. You can always change beneficiaries, should, there be new children, change your partner or something like that. Just look at it every year because you're paying a lot of money for life insurance. So it's really important to make sure that you're properly covered and you have everything that you need. And, you can look at discounts as well if you're looking to buy other insurance. Now, buying on price, this is a common thing that people do. And, they just go to the cheapest. Often, the cheapest isn't always the best. And there may be some first year discounting or something kind of enticing. But then you could be, finding that year 2 renewal, year 3 renewal is actually quite high. So just have a look at everything. Don't rush in. Look at the policies side by side. Ask the questions that you need to know, because everyone's going to bring a different situation or a different sort of family history to their life insurance cover. Just make sure it's right for you, because there's so many variables out there. So, and then finally, 2 important points: a failure to declare. This is really important. It's a must do. You've got to be honest with your insurer, because if you're not, and you unfortunately die, and it was caused by something that was known but not declared, then it's going to be denied in most cases, and so that's really stressful and problematic. So you've paid for something that's not able to be used just because you didn't make a declaration of any kind of existing health condition or, something like that. So, and also like another mistake, not comparing prices with other companies. So shop around, don't rush into it. Just make an informed decision by having a look at the options, talking to people, and just getting the quotes, and then, obviously discussing it with your family as well. So finally, we've got some frequently asked questions. And this is really just, I'm going to just sort of list them out here because you can read them, and, the answers are going to be different for everyone. How much will life insurance cost? Well, that's going to come down to your individual situation, your age, and your health, your job, smoking, etc., plus also the amount of cover that you want to get. So do use a tool. We've suggested Life Direct as one option to get some quotes, but compare the market widely. So don't just stop with them. Just go, obviously go and see what's out there. And then how can I work out how much cover I need? Basic journalistic rule seems to be 10 times your pre-tax salary. At the same time, use a calculator. We've got one link down below. The life insurance calculator, very useful. And, that's going to give you some more sort of indication of what amount you should be really looking at. Because it could be way more, it could be way less than your salary times 10. Now, how will claims be paid out? They're tax-free. And that's the situation as long as you pay from it, pay your policy out of your like post-tax income. So you pay privately. If you arrange it through work, then there can be some tax considerations there. And when should I change or cancel? We've got a whole different guide to that, so that's worth having a read through. I can't answer that in a kind of short summary. I've also talked about here what is indexation, and this is looking at keeping up, making sure that your policies are covered properly, and that like the value of the dollar obviously gets eroded as we go through high inflation periods. So just making sure that you're properly being looked after, and sometimes the insurance will trigger that with inflation adjustments. And then what happens if you don't stop? So if you stop paying your premiums, then there's going to be a different option. Some of them have a grace period, some of them have a like holding period where they'll look after you and try and sort of renegotiate it all, and sort of renegotiate the payments. Have a look at what the policy is. Sorry, have a look at what the terms for payment and non-payment of the policy are, because that's going to be important if you do have problems paying bills on time. And then what if your circumstances change? So, of course, making sure that you always review it on a regular basis. Once a year is good, and making an informed decision from that. Once you have life insurance, obviously then you'll be a lot more familiar with it. But it's good just to get an understanding by looking at it every year. It doesn't take long. Look at some YouTube videos, have a Google, and just make an informed decision, as to what you need to change or anything like that. Finally, if you have any questions, please leave them in the guide. So please leave them in the comment section below. It's really helpful for us to improve our guides as comprehensively as possible, and we want to make them complete. So often people ask us questions, and we think, yes, that was great. Please, thank you so much for doing that. And then basically we just extend our guide. So it's really useful to people just ask us. We're very responsive to responding on YouTube. Of course, the benefits of that flow onto the MoneyHub resources themselves. Thank you very much for watching. If you have any questions, as I said, please leave them below.